BG Trading. Hope you are well. Today is 10th May 2022, and I'll be telling don't panic. Could be a great opportunity to buy stocks at technically discounted price. I'm going to share few stocks that I believe could be into a really good buying opportunity to lock in 40 to 50% within the short term as soon as the market rebounds. So let's have a look. Just want to remind, this is not a financial advice, it's just us from BG Trading sharing with you how we apply our strategies to know when to buy and when to sell stocks, how we set up targets, stop losses, how we avoid FOMO, and much more, all in this channel. So if you like the way we trade and the content, please share this video with someone that you believe could be helping. Also, hit the like button and subscribe to the channel. So let's jump straight into our thoughts about the market. This morning, I have shared in our Facebook community buy, grow, sell strategy for share traders. By the way, if you're not a member of this community, it's free. We put a lot of great quality content, great quality conversation between members and ourselves. So jump in and become our member as well. So now, don't panic. Why not panic? We have seen this movement in the market over and over again. I'm going to show you in a few minutes. The best buy opportunity lies when most of the market is fearful, which is pretty much what we're talking about now here when the markets crash. So when normally you should be buying stocks is when you're not feeling good about the market. That's what happens. And the market plays a completely different emotional input in everyone. And we really gotta make sure we understand how to manage this and take countermeasures to ensure you offset potential losses. So don't trade with the money that you need in the short term. If you are trading with money that you need, you won't be able to sleep, you won't be able to wait the stock to reach the target, you'll be doomed. So best thing really is to do not trade with money that you need in the short term. Okay, so we taught you how to use some countermeasure to offset potential loss. So what we did when the market was up, we started buying BBOs because we knew it with volatility, the market would take a correction soon or later. And you can see that in the past videos, in the past content, BBOs, BBUS or Bear, the ETF funds, great funds to short the market. When the market is up at the top, so that's when we should be open at least 20 to 25% position there. And then once the market falls, you can take a little bit profit, but mostly important, you protect your overall portfolio from big losses. Now, also, the market is now due for rebound. That's what I think. If a lot of people be asking, do you think it's gonna go these markets crash will go longer and longer? Look, what I think is, and I'm going to open here. Okay, this is ASX 200. I think the market now is due for a rebound. Okay, so I just want to remind you what happened in January. And when we have a very similar situation, one of the worst start of the year. So the market fell. This is Australian market, by the way. Obviously, there is influence from US market, but we are a lot more protected with resources. So it fell 11%. And then one of the biggest fall, is actually the biggest fall since COVID crash. But then we also had the biggest rebound since COVID crash. So 12%, almost 13% up within the following 2 months. And that's when we locked in a lot of great profit out of Core Lithium, ARGOSY Minerals, Alken Limited, Novonix. A lot of the stocks that we've been trading, we locked a lot of profit in there. And then also we opened the BBOs position. And now what happened is, it's happening exactly the same. Now, I'm not saying that it's going to go up again to the higher, but because the volatility, the macroeconomic facts are still very much the same of the beginning of the year. Nothing has changed. The market is uneasy as it was. The volatility levels are high as well when it was at the bottom here. And we still have COVID around, disrupting supply chain, causing lockdowns. We still have Ukraine and Russia war. We still have high inflation. We still have the threat of interest rates to be raised more than has been anticipated. And that's what causes that. Recession is almost inevitable once you have a artificially inflated economy boosts as we had around the world, right? But we can see that already has started to be priced in within the last 8 months since August last year, as the market has started trading into this sort of a flat channel here, right? So this is the channel that the market has been trading. So recession mode, right? Can the market fall small? Yeah, it could. But again, like what you need to be at in industries that has great macroeconomic facts. So like EV industries or mining industry. Obviously, you understand the risks, but we're still going to have massive demand for lithium since we have EV revolution. It's not going to stop. We have a bottleneck of supply of lithium as well, and anode and cathode materials. So it's still pretty safe, I would say. And obviously, if you need to protect your capital, you need to take stop loss and use a stop loss, right? But if you in the game for the long term, so that's when you get the money they invested, as long as you buy at the technically discounted price. Now, again, my thoughts on the overall market is that we do now for rebound, and that's why we're going to start opening some positions or increasing our holdings in some of these stocks. And look, we are down about $63,000 from the overall portfolio that we had at the top. So we took some hits as well in our portfolio, but if you haven't short the market, we would be way worse. So that's why we need to use countermeasure in place, okay? Because eventually you're not going to win all the time. Eventually you're going to be holding some negative positions, and then once the market starts improving, then you're able to exit all those positions, all right? Now, obviously, past performance doesn't mean future performance, but what I want to say is this movement, this volatility has been happening over and over and over again. And then every time everyone gets scared, that's when the opportunities lie. Now, let's start with the first stock, Core Lithium. Core Lithium stock that we've been trading is going to be the Australian next lithium producer. They're on track with the production of, with the completion of the plant of finished project in North Territory. So there is a lot of potential for this stock still to go as an upside. And now at the low $1, it shows a very appealing opportunity to buy at a technically discounted price. The best price really at this stage would be if you can buy around $1, but I would say that at the moment it's already offering a technically discounted price and a great upside for Core Lithium. You can see the stock has been bouncing back from 102 with a high volume, which is pretty positive. Now, another stock that I would look into for sure is Allkem Limited, which is one of the 5 largest lithium producers in the world. We have videos about about Allkem Limited, which is, if you don't know, is a company that emerged from from Orocobre and Galaxy Resources. So they formed this company, and then obviously now they're really well positioned. They're expanding their production, and they still, as I said in past videos, from now until 2020, mid of 2023, I would be fairly confident that lithium demand will keep going really strong. Now, the third stock is in actually travel sector. I think the whole travel sector is currently at the buying area. Although we lock in some profits with Fly Center early last week as the stock reached the target. Now, as you can see here, Fly Center is currently trading at technically fair price, right? Around $20. And for the long run, I'm very confident that travel sector stocks like this will do pretty well. So I would be hoping here for another rise. And then I believe that Fly Center could reach around $25 within the next, as soon as the market starts to bounce back. Webjet also it's an interesting stock. We actually still holding Webjet at the moment, as hasn't reached the target. But Webjet is looking very appealing around $5.50. Okay, which is a stock that you can also, for now, $5.50, you can do 20% as soon as the stock reaches around $6.60, which would be same sort of levels in October 2021 and November 2021. So I'd say 20% is possible in Webjet. Obviously, we enter way behind. We're still waiting for the target, for the stock to reach the target. So travel stocks and EV stocks is still a great opportunity at the moment, and they are cyclical. And then now that's when we want to be buying, when they are out of home area at technically discounted price. So here you go, guys. Four stocks that I believe could be doing well within the next 3 to 6 months, and also not at the FOMO area, trading at technically discounted price, according to BGS 20 strategy. Hope you enjoy. If you have any questions, please put in the comments below, and I'll be very happy to answer all these questions. Have a fantastic. The whole idea when we designed BG Trading BGS 20 strategy was to use only a set number of indicators to make it simple and clear to understand, and to be able to apply our KPIs very easily and very effectively. So you don't have to be any Wall Street smart person to be able to apply those strategies. We really hope this course will help you to make better decisions and make successful trades. See you in the course.